Fed ghosted us again on rate cuts. Surprise, surprise. Leaving them unchanged for the 5th straight meeting on July 30th. But what if I told you this was actually incredibly bullish for all risk assets? Your Bitcoin, your Solana, your dog coins. Because since the delays began, Bitcoin's pumped 23%. That doesn't sound mega bearish to me. In fact, this delay might be the most bullish setup of the year. While the Fed held rates steady, what has been happening behind the scenes is actually way more important. So I'm going to break down for you why the delay in rate cuts may actually lead to a much bigger, more sustained, crazy pump, the hidden signal the Fed just gave us that really no one's talking about, and about how Bitcoin, ETH, Solana, dog coins, all the other crypto stuff could go absolutely bonkers crazy once summer comes to an end. With no FOMC meeting in August, all eyes now are on September. So we're not going to have any Fed rate cut news until about 2 months from now, 6 weeks, something like that. But don't mistake silence for strength, because under the surface, the cracks are appearing. Goldman Sachs just dropped a bombshell report. They're now forecasting three 25 basis point rate cuts starting in September. So what changed? Why the sudden change of tune? Two things. Goldman Sachs says inflation is easing. We have a lot of evidence of that. We've been talking about it significantly for a long amount of time on the channel here, and this is big. The labor market, of course, now is in focus, and that has taken a turn for the worst. The July jobs report showed the U.S. added just 73,000 jobs, well below the 109,000 that were expected. But the biggest shock came with one of the biggest job data revisions downwards since 1968, outside of recession anyway. The Bureau of Labor Statistics just revised down the May and June numbers by a combined 258,000 jobs. Brutal. That's the kind of adjustment you see only when the economy is cooling much faster than expected, raising alarm bells for the economy and for the Fed. But the problem is, job growth has been averaging just 35,000 jobs a month for the past 3 months, well below the 100,000 needed to keep up with population growth. That means right now that the labor market is not growing, and that's a problem for the Fed. In fact, it's shrinking, and it gets worse. The manufacturing sector saw a contraction for the 5th straight month, with the ISM dropping a single point down to 48. Tariffs and immigration policy are both coming together to create supply chain disruptions, and the national hiring rate is at its lowest level since 2014, if you exclude the early days, of course, of the 2020 pandemic, that is. Now, Jerome Powell may not have cut rates yet, but after this report, the pressure is on for a September rate cut. If he doesn't cut in September, it's just politics at that point. Because while the Fed hasn't pivoted yet, the economy already has. The economy is showing all the warning signs that the rate cuts are late. And guess what? The bond market agrees. The 2-year Treasury yield dropped 22 basis points after the news. That's Wall Street quietly whispering that the pivot is finally coming. Analysts like Tom Lee are now saying that the case for rate cuts is undeniable. And when they do finally make the pivot, guess what happens? Risk assets like crypto are going to front run it hard. So we're not off track. In fact, we're right on schedule. None of this is bearish. It's the countdown to euphoria. And with a 92% chance priced in for a September rate cut, smart money is starting to position itself. You may want to consider that as well. Goldman Sachs even says if the next jobs report shows unemployment rising again, we could even see a bigger 50 basis point cut. You don't want to see a panic cut though. 50 basis points would be on the edge. The Fed may be forced to move faster than they want. And look, I get it. You're probably wondering, well, if the economy is slowing this much, then why haven't they cut yet? Well, the answer is simple, and we could probably put a lot of it down to Jerome Powell's ego. The Fed is scared of messing up again. The rates have complicated things. They say, well, if we cut now, but what if tariffs drive inflation back up? Then we made the wrong decision. In the 1970s, the Fed cut too early. Inflation came back with a vengeance, and they lost credibility. This time, they're holding off until the data absolutely forces their hand. The Fed is a very lagging institution, a lagging indicator for what's going on. The longer they wait, the more aggressive the market reaction will be when they finally do pivot, when they finally make significant cuts and bring interest rates back down to more manageable levels that allow businesses to invest and expand and housing markets to unthaw and all that kind of stuff. Well, the markets are now waking up to the incoming macro shift. Something even more interesting just happened. behind closed doors. You need to listen to this. Before we break that down, guys, if you're trading these cryptocurrency markets, look, there's a reason traders keep coming back to Femex. They know how to reward traders. Right now, if you deposit $1,000, you're gonna get $200 cash back in your account. That's crazy. Go bigger, $10,000, $15,000. Guess what? $1,299 back. That's crazy, man. This isn't just points or BS. It's real cash money back in your account, okay? On top of that, you get an instant upgrade to VIP level 2 exclusively when using my link right down below here. That slashes your spot trading fees by 50% and your futures trading fees by 40%. That's crazy. This is a crazy deal. And guess what? Femex is available to anyone, anywhere. That means you might need a VPN in some cases. So if you're a serious trader, don't sleep on this one. Femex is an OG exchange. They got deep liquidity on the coins that you want to trade. Click the link down below. Deposit, start earning from day one. Go check it out. Now look, right now it's not just the data that's breaking. The Fed is also breaking too. At the last FOMC meeting, 2 Fed governors dissented. Again, the cracks are starting to appear. People are not happy with the way Powell's doing things. This is the first split decision since the 1990s. Well, that might sound like a dry central bank drama. Oh no, 2 governors dissented. It's actually flashing a sign for what's coming next. Historically, internal disagreements like this within the Fed are leading indicators of future rate cuts. People are getting less and less happy with Jerome Powell's refusal to cut rates when it's so obvious that it needs to happen. It's the internal tension before the pivot. The moment when even the Fed's own people are saying, Jerome, you gotta cut the damn rates, man. We've gone too far. We've waited too long. And if we don't act soon, the implications are going to be catastrophic. And it's not just disagreement. There's actual turnover happening now. Fed Governor Adriana Kugler just resigned mid-cycle, paving the way for President Trump to appoint a new, likely more dovish nominee to the board. For more dissent, that matters because personnel changes shift the balance of power at the Fed. And with Trump ramping up pressure on the Fed currently, we are entering into a new monetary regime. A monetary regime that's likely to prioritize much, much looser financial conditions. The financial conditions are already relatively loose, and they're about to get way looser, man. And they want to have those loose conditions heading into the next midterm elections. They want the economy to be pumping. They want the housing market to start pumping. They want crypto and stocks to pump. So while Powell's playing it cool on the surface, the internal structure is cracking. The pressure has never been higher for the rate cuts to come. The Fed is starting to lean, indeed, toward easing, even if it hasn't made the official move yet. This shift won't be a panic pivot, by the way, because the market has been waiting all year for it. Everyone's expecting it to happen. And if Fed doesn't cut, that's a different story, and the market may react negatively because the writing is on the wall that it needs to happen. The best outcome the crypto market could have hoped for could be coming. Now, according to Milk Road, slow cutting cycles, believe it or not, are actually much more bullish for risk assets than fast ones. You don't want fast cuts. Fast cuts are panic cuts. You don't like that. Emergency rate cuts usually come during recessions and chaos ensues. But when slow, steady rate cuts happen, when the Fed sees cracks before everything breaks and starts easing into it, that's when you get the nice, smooth moves, baby. And that's what's happening right now. So with the Fed divided and a softening economy starting to force the hand of the Fed, the question isn't if a pivot is still coming, it's where does the money go when it happens? That's what you need to ask yourself. If the Fed cuts rates, and they're going to cut them slowly, and we have evidence that slow cut cycles are the most bullish cycles, that has an immediate effect. Risk appetite explodes. Bonds become less attractive for investors. Yields fall. Capital starts rotating into higher growth assets. That's where we're headed right now, and crypto will be front and center. Goldman Sachs even said the quiet part out loud. A Fed pivot would alter asset allocation strategies and drive capital to risk assets like tech stocks and Bitcoin. That's not me saying it, that's effing Goldman Sachs. Let's be clear, we're already seeing that rotation starting to happen. The fact that Bitcoin has been consolidating further below its all-time high is a sign of what's to come. Look at the performance with the rates as they have been. Imagine what happens when money gets easier and when financial conditions get even looser. The crypto market is quietly gearing up for a major move. And when the market moves up again, it'll move up fast. And this is when we will finally see some real move on altcoins too. ETH probably breaks a new all-time high. When this happens, it'll be an exciting moment. Bag holders finally get to celebrate after years and years of being underwater. Not just a fake out potentially coming, but a full rotation with ETH continuing to outperform BTC, capital eventually rotating into quality layer ones, DeFi, AI, real world assets, and even meme coins are going to go absolutely bonkers to the moon. And if you're sitting on the sidelines waiting for Powell to say the word rate cut, guess what? you'll be buying the top of the next leg. You have to believe that it's coming beforehand. You have to allocate before the herd does. Be patient. The setup is here. The pivot is coming, and crypto's likely going to explode when it happens. Thanks for watching.